Hello friends, hello traders. Today we are going to analyze SPY chart on a this is SPY chart. It's not okay. Okay, SPY chart on a 5 minutes time frame. So first of all, we are going to see the direction of the market. Since we use two indicators to show us the direction of the market, 200-day moving average, simple moving average, and a 20-day moving average, simple moving average. So 200-day color 200-day moving average is the red color line on the screen, and the blue color line is 20-day moving average. Since the market has opened on the above both these moving averages, the market is in a bullish trend as per our strategy. So basically we will try to buy the market as long as the market stays above these two moving averages. Okay, so let us see the first candle of the day. It has gapped up. It has gapped up by so much. So whenever there is a gap up from the previous day, basically the first candle of the day, we have to, for analysis purpose, we need to join the previous day close with the current day's open. So this candle, technically it is such a big, it's a very big bullish candle. Starting from here, starting from here till here, this is a very big candle. Okay, and it's a bullish color because the market has gone up. It is a green color candle. So now let us analyze the trade one by one. Since this is a very huge candle, and the entry will be the distance between the moving average and the candle is too big. Conservatively, we can wait for one more confirmation that from there market can go up. So after the first candle, we don't take trade on conservative basis. Second candle is not that bullish. We can still hold and we don't have to enter the position. Third candle is a red candle, which is against our trend. We don't want to trade here. Fourth is also red candle. We will hold. We will sit on our hands. Fifth candle is also a red candle. We don't have to run and take the position. Now sixth candle, if you can see, this is the most, sixth candle is a solid green candle. This candle also breaks the high of the previous two candles in one shot. So these two candles, high has been broken. Also, if you see, it is a full body candle. It's a bullish candle. It is basically the most bullish candle in that day. That is on 7th August. This candle is the most bullish candle of the day. So basically now we can take a trade. So once we enter the trade at the end of the close of the candle, so our entry buy at the close of this candle, and our stop will be below this candle. Once the trade is entered, within two candles the market moves down and takes our stop loss. So our stop loss is hit, and with the we lost around 1% of the capital, or say one risk unit has been lost. Okay, this is a loss of one unit. Then second thing is, now we need to wait for a solid green solid candle above both the moving averages if we want to take on the bullish side. And but if you see, the market has been steadily going down, continuously it has been going down, and it closes below 20-day moving average. So from the strategy front, we know that if the market is stays in between this 20 and 200, it is a no trade zone for us. No trade zone. So as on 7th August, the market from this candle, the market has been in no trade zones till the such time it comes out on this candle. So we won't take any trade till from here to here. This candle, it is trying to come out of the zone, no trade zone, but it is not a very big candle, it is a very small candle. And since we already lost one trade on the call side, on the bullish side, we have to be very conservative while taking the second trade in the same direction. So if you see, we don't enter on this candle. Next is a red candle, so the next entry on the long side is ruled out. And this candle is also not very bullish, and even it has not crossed the high of the previous red candle. I'll show it once again. I'll zoom it for you to verify it, if you can see properly. This red candle's high has not been broken by this green candle, so we don't take a long trade here. And then third candle, this candle again takes the market in the no trade zone. Okay, no trade zone. So we today 7th is the sit on hand kind of market. We don't have to trade any good setups not coming through. Now this candle, if you see, this is a strong bearish candle. It has crossed both the moving average and closed the market below both the moving averages. This is the 200. Can we take a trade here? I suggest not, because see, the most ideal situation is there is a 200, there is a 20, there is a market. This is the ideal situation. But here in this case, what has happened is, top is 20, next is 200, and then there is a market. So there is a flip between 20 and 200 moving average. We ideal scenario is 20 above all in the when we are taking short trades, 200 above, next one should be 20, and third one should be the market. Then we can take confidently go and take a short trade. But if you see in this candle, this is 20, this is 200, and market is here. So both these two are interchanged. It's not ideal for our situation. So what we can give one more chance. We can wait for one more confirmation from the market that it really wants to go down. But in the next candle itself, it turns bullish. 1-2 candles in a row, it turns bullish, and over almost it has crossed the high of this big solid red candle. So again the sentiment has shifted bullish here. This is a bearish here. This is again bullish here, again bullish here. So now it is confusing market. It is going up and down. We don't know which direction the market wants to go. Next candle again it turns bearish. Again it is in a no trade zone. Again the second time the market has come down from the below the both the moving average. So since the market has been continuously coming down, if you see, the market has been continuously coming down from here till here. So the likely of the trade success is low, but since we want to stick to our strategy, and we want to stick to our strategy, and we can take one short side. First trade we took on the long side, and market has been continuously going down, so we can take a short trade on this candle. Now once we enter the position, the market again almost takes out our stop loss, came very close to our stop loss, but again it fell down, and we don't close it here. Why we don't close it here? Because there's no sufficient movement in the market. If you see our risk reward tool, if you put it here, and let's hold on. Yeah, risk reward ratio, if we do the maximum, it had reached is 1.6 maximum. This trade had reached maximum of 1.69 risk to reward to risk ratio at this level, but we need generally 1:2 minimum to take the trade. So we didn't close it here. Then the market comes here, almost most of our profit is gone, so we don't close the trade here, and then it crosses again 20-day moving average. So this again the market is shifting towards the bullish side, and we exit the position here. So our entry was here, sell entry was here, our stop loss was here, and our take profit is here. If you can calculate the risk reward ratio on this trade, we earned around 0.3 risk reward ratio. This is negligible. Okay, this is negligible, but just it will recover our brokerage cost or small cost of doing this business. After this, after we close the second trade, we don't have any entry between these two lines, and once this comes out after this point, this is a time to close market. Market is near its closing time, and we don't want to take any trade. So market is closing time at this level, and we don't want to take any new or fresh positions. So we close the day with only 2 trades. Let us see the outcome of the 2 trades. First trade was a loss. First trade was a loss. Okay, -1. Second trade is plus 0.3, so net is 0.7. Now let us see whether we have put it correctly in our tracker. If you see SPY analysis, on the 7th date. I'll change the color to red, it will be more visible. Blue I'll do. I think pink is okay. So on 7th August, we made two trades. First trade was -1, second is positive 0.3, and so net we made around 0.7 risk to reward ratio. Okay. Now that's all for the trade analysis on 7th August. I urge everyone to look into the other products which I have been analyzing on a daily chart on the same website, Means to Money. You see, Means to Money. Okay. We have other products like BTC USD, Bitcoin, crude oil, Euro USD, Gold USD, gold. Okay. I'll open one few things for you, few products, and show it to you. Okay. So if you see BTC, Bitcoin on a daily chart, you can see this is a daily chart and the support and resistance lines have been drawn. Okay, support and resistance lines both are drawn. If the market closes above this trend line, it can turn bullish. That opinion has been already been communicated here. Similarly, we have crude oil. Crude oil is the bearish view, already broken this supporting trend line. Okay, this trend line has been broken and it is expected to reach to this support resistance level at 55.3. Next we have Euro USD. Euro USD also is in a no trade zone. It is stuck between moving averages. It is almost close to 20 moving average, but there is a downward sloping trend line. As you can see, this trend line, market has to break this, take a support on the trend line, and it can go further on the long side. So this is what we are expecting in future. Next instrument is gold. You can see gold is in a continuously sideways market for a long time. If you see this, if you see the time, it is between April, start of first 2 weeks of the April. From this time, the market is continuously in the sideways market for a long time. So April, May, June, July, August, so around 5 months it is in a sideways market. Now once it crosses this horizontal support resistance line, it can take a support here and it can go in the long side. It can go up, it can go bullish. Otherwise, if it goes, market decides to come down, it will break the support line at this level, take again re-support at this level, retest, and then it can go bearish from here. So we have to see, we cannot predict the market. I'll note it once again. We cannot predict the market. Okay, predict. We only have to observe the market and follow the trend. Okay, so we are not in the business of predicting market. We don't have any crystal ball. We just have to only observe the market and follow the direction of the trend. Because of this, if we follow the trend, we will be more right than wrong, and our chances of making money are more. So basically a game of probability. So this today I wanted to show you other products which I am analyzing on a daily charts on the same website, Means to Money. So I request everyone to like, share and subscribe. We have a presence in, say, Facebook. We are on Instagram. We are on Twitter, and we are also on YouTube. We are already listening. And that's all for today. Thanks a lot. Acha, and one more thing. If you guys want to join my subscription, sorry, or email list, where I will be sending you direct updates to your inbox. You can put your email and subscribe it, and you may get a email in future. You will get the charts analyzed and sent directly to your inbox. Okay, that's all. Thanks a lot. Take care. Good night.